Bitcoin has broken over the major $38,000 resistance, pushing as high as almost $40,000. Will Bitcoin continue upwards on the short term, or can we expect a short-term correction? In today's video, we're going to be going over the short-term charts, the macro charts, the bull market, and everything in between. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you all have a fantastic weekend. Bitcoin has broken through the major $38,000 resistance, shooting upwards nearly as high as that 40k target. In today's video, we're going to be discussing Bitcoin from a short-term perspective, going over the current charts, discussing the next likely moves, whether or not Bitcoin will continue upwards or see a rejection, as well as going over the macro charts from a macro technical and structural perspective, talking about the bull market and current 4-year cycle. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our VIP group, we post trading signals with exact setups, exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. If you're interested in joining the VIP, not only will you get access to this group, you'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our help, our news, and our daily video chat. If you're interested in getting more information or contacting me to join, go ahead and contact me via the pinned comment in the free channel to get access. Let's go ahead and dive into the video. So a lot is happening for Bitcoin. As we mentioned, we have finally broken upwards from this uptrending ascending channel formation toward the upside. If you take a look at a short-term chart, we can see the 38k level was acting as a major bullish trigger, which would facilitate, when broken, a rally towards our next major resistance sitting around 40,000. We'll come back and discuss this in a lot more detail when we get up to our short-term analysis. Moving over to the market data, we can see for the 24-hour period, volume is down 8.8%, sitting at a total of 78 billion, and 24-hour liquidations are sitting at 128 million. This is up 51% in the last 24 hours. So a whole heap of liquidations coming in as Bitcoin breaks through that major resistance. Taking a deeper look at those liquidations, $100 million in short liquidations and 23 million in long liquidations. What does that tell us? It tells us a whole bunch of people were hedged toward the downside, expecting a correction to 32 potentially, and they got wrecked as the price pushed upwards. As we said, guys, we were in a major uptrend. The trend is your friend until it ends, and while we remain above this uptrending support, the most likely directional move was a break above 38k and a continuation upwards. If you played that perfectly, congratulations, we have been on top of it on this channel. Moving over to the market data, again, we can see monthly returns for November came in at 8.89%. Moving into December is slightly historically more bullish. It is historically a little bit more bullish than it is bearish. We've seen some big red months, particularly in 2021. We saw a pretty big red month in 2013, but again, we're going to go ahead and call that negligent. We don't really pay attention to 2013 since the price action was so volatile back then. It was actually expected to see these massive changes month on month. So looking at the last recent, say 9 years, we can see we've had a few months push 30, a few months push 15 negative, but mostly we do see, you know, a little bit more of a bullish reaction in December, something to look out for going into this month. Moving on from there, guys, taking a look at our volatility index, we can see on the 30-day period, our volatility index is still pushing sideways. And on that 60-day period, we can also see the volatility index, we are still pushing more or less sideways. Let's go ahead and jump into the broader markets. The DXY is still retesting support here, currently testing this 103 zone. Again, a loss of this level will result in a continuation downwards to 101. This will be very, very bullish for the overall markets, for cryptocurrency, and for the stock market. If we do see a bounce from this level, we are expecting a retracement back up to retest this 105, potentially the downtrending convergence level. This will be acting as our current downtrending resistance. If we are able to break above this point, we can expect a continuation upwards. This move will be very, very bearish for the broader markets. I'd be expecting a correction lower if we do break through this level. Moving over to the S&P 500, the S&P 500 is currently retesting that downtrending diagonal resistance. Again, we have our level of resistance over here reflected as our December all-time high. We have our 2-point touch, which is going to be on July 2023, and we are now retesting that respective trend line at our present date. Again, a break through this level will very likely result in a strong continuation upwards, potentially to retest that all-time high at 4,800. Until then, guys, we are challenging this resistance, but it is also important to note we are in an overall uptrend while we remain above this diagonal trend line. Moving over to the Dow Jones, we can see the Dow Jones has kind of stepped ahead over here, breaking through that respective resistance already. Again, expecting this trend to continue towards our all-time high, provided we are able to remain above this diagonal now as support. With that being said, let's go ahead, guys, and dive into Bitcoin. So, before we do, a quick word from Bitget and BingX, and we'll jump in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right-hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Alright guys, so much to talk about today. We're going to be discussing the short-term charts first. We have seen that $40,000, well, almost seen that $40,000 retest. We have definitely now seen that break above $38,000. What does this mean? Where is the price going next? And could we still see a rejection? So first and foremost, guys, $38,000 to $40,000. What is it? And why is it important? So for answering that question, we do have to zoom out quite a fair bit to a 3-day chart on this macro chart over here. We can see our levels in. At the moment, we are currently sitting at 39,400, which is basically smack bang between the 38 and 40k level. This 38 to 40k level is in fact a horizontal level of resistance, meaning the entire zone between 38 to 40 is in fact high time frame resistance. If we look at the smaller time frame chart, the range between our bullish trigger, which is 38 to 40,000, which is our bullish breakout target of the break of the 38k level, is in fact a zone of resistance. So all we were expecting from the break of 38,000 is a rally to retest the range high of the current macro resistance at 48k, which we can almost say we have pretty much actually completed. So zooming out, what significance does this have in terms of the macro directional continuation of Bitcoin's price action? So we'll go ahead and draw a hypothetical channel in here between that 32K level, okay, our 32K low, and our current high at 48,000. We can see that dotted trend line is sitting pretty much exactly where we have retested, which is going to be the mid-range of the current range of price action between our obviously mid-level of resistance, okay, our high of resistance, which is going to be the 48K level, and the low level of support. If we take a look at these levels particularly, we can go ahead and define these. The high resistance is going to be the bull run trigger. Okay, if we break above 48K and close above here, we actually enter a bull run. We'll discuss this in today's video in just a moment. And this is going to be our monthly uptrend trigger. If we break below 32,000, we actually lose this monthly uptrend and we enter a macro downtrend. And the 38 to 40K level is the major and only level of high time frame resistance between the $32,000 and $48,000 resistance. So 38 to 40,000 plays a major role in the current price action as it represents the first and most important macro resistance between 32K and the bull run trigger at 48,000. So what does that mean? That means if we break above this level of resistance, if we break above 40,000, we will be flipping this level of resistance into a support, and that could facilitate a continuation upwards to retest 48,000 like we have seen in the past. So before we get back into the short term, let's go ahead and expand this point on the macro chart just to give you a little more context. If we take a look at that 48K level, the 48K level is actually reflected, or should I say represented, by the dotted trend line. You can see the dotted trend line over here. In this instance, you can see another dotted trend line over here, and you can see a final dotted trend line over here. Along with the dotted trend line, you can also see a solid horizontal trend line. The solid horizontal trend line represents the base of support within the bear market that, when lost, resulted in a high time frame capitulation event to all-time lows. So let's go ahead and look at that and explain it. We can see we have a base of support over here, many months of support, we lose that, we capitulate to all-time lows. We have a base of support, many months of support, we lose that, we capitulate to all-time lows. We have a base of support, again, many months of support, we lose it, we capitulate to all-time lows. So this level of resistance, this horizontal line, actually marks the flipping point between a macro downtrend and a macro uptrend from a structural monthly perspective. Believe it or not, that level is actually 32K. So we go back to this chart, we can see that horizontal line is reflected by this level. Then we have our dotted trend line, which is reflected by this level at 48K. Back to the macro charts, the dotted trend line is going to be the highest point the price reached after the all-time high. So you have the all-time high, we retest that horizontal trend line, we bounce, the highest point that was reached, a dead cat bounce, is going to be the dotted trend line. Again, we have the all-time high, we retest that horizontal line, we bounce, the highest point reached is that dotted trend line. Once more, we reach the all-time high, we retest horizontal trend line, we bounce, and we create that local high at 48,000. If we take a look at this dotted trend line from a structural perspective and do a trend angle analysis, we can see the price action below the dotted trend line in comparison to the price action above the horizontal trend line is significantly weaker. So we can do this by taking the trend angle. We take the trend angle from the low to the point of which we retest that trend line, and then from the point of which we break above the trend line to the high. What we can see is the trend angle jumps from 33% to 64%, from 31% to 54%. That percentage, or that, not percent, degrees, sorry, that change in trend angle signifies a high time frame shift in trend strength, volatility, volume, and momentum. On a macro scale, such as a monthly chart, that is the exact environment we want to see to actually categorize a price to be acting similar or in fashion with a traditional bull market. If we take a look now if we break above this dotted trend line, we would expect a similar reaction. We would expect volume to pick up, we would expect volatility to pick up, and we would expect macro strength to pick up, actually officially triggering the start of the next bull run. Furthermore, if we take a look at the 4-year cycle, we do have our date range trends. We can generally see the cross of that dotted trend line always occurs within the bull market phase. The bull market phase is simply the date range trend within the 4-year cycle that is generally reflective of when the bull run likely occurs, starts, and also reaches the all-time high. In this instance is reflected by the green zone. According to the 4-year cycle, the bull run is expected to initiate from April 1st, 2024 and end around October, September 2025. So according to the 4-year cycle, according to the structural levels on the higher time frame, everything that is happening has been playing out exactly according to plan and expected. Sure, the short-term price action has been choppy some months. Sure, there's been a lot of news and manipulation, but in terms of how we would like to see the price action play out and what we would expect, it is actually playing out exactly as history has expected. So moving on from there, guys, let's go ahead and take a look at some technical indications and then jump back to the smaller time frame chart. A few indicators I actually do want to discuss first and foremost is going to be the baseline of the Ichimoku cloud. And this is a phenomenal indicator I've been using in prior cycles, and I intend to use this indicator again, as it does, with a pretty strong degree of accuracy, tell us two things. Number one, where we can expect a rejection potentially from the higher time frame, and number two, when the bull run is likely to actually kick off. Now, when I say when the bull run is likely to kick off, this isn't undermining the fact that we're in a macro uptrend. This isn't undermining the fact that we are very bullish. That is simply defining as a difference between a strong macro uptrend, which we have been in ever since the start of the year, okay, and a traditional quote-unquote bull run. There is a very, very big difference, okay? So looking at the Ichimoku cloud baseline, what we can see is generally when we create the all-time high, we are above the baseline. We eventually lose that baseline and we push to lows. Now, from the point of which we lose that baseline to the point of which we retest that baseline, we are technically in this higher time frame bearish phase, and when we're above it, we are in this higher time frame bullish phase. So we're looking at crossover points. What we can see in the past, when we crossed through that baseline, we actually remained above the baseline until we reached an all-time high, only then to cross below it and reach an all-time low. If we look at the past, we break above the baseline, we remain above that baseline until we create an all-time high, we cross below it, and sooner or later, we create an all-time low. If we take a look at the current price action, you can see that baseline level is actually coming up on us at $42,000. So we are watching at 42K for a potential reaction. Furthermore, guys, looking at some different indicators, we have two more indicators on the macro scale that are flashing macro signs. Number one is going to be the market cipher A. If we take a look at market cipher A, we have got a blue triangle printing. Every single time we get a blue triangle, it represents a cross of the 2-3 moving average, in this instance, the 15 and 17 EMA. If we do cross above this level, we generally remain above the 50 EMA. So when we get the blue triangle, we remain above the 50 EMA until we get that red cross, which is going to be a cross on the opposite direction of the 17-15 EMA, resulting in a continuation downwards. What is this suggesting? It is telling us we are very likely to at least remain above $27,000 until we reach an all-time high. Will I bet my life savings on this? Absolutely not. It is just an indicator. It is just a reflection of the price action and overall strength. Will it play out again? It's played out 2 times in the past, so maybe it is just something to keep your eyes on. And finally, looking at the Bollinger Bands, we also can see we potentially have a monthly candle close coming up above the upper band of the Bollinger Bands. So if we take a look over here, the last 2 times we closed a monthly candle above the Bollinger Bands actually initiated that macro uptrend and start of that bull run. You can see here and you can see over here. For the first time in over 1,030 days, we've actually pushed above the upper band of that Bollinger Bands. let's go ahead, guys, and finish up the video on that short-term price action. So first and foremost, we have to go ahead now and define our key trigger points. So what do we have? This key level, which was a bullish trigger, has now turned into a high time frame level of support, as well as, okay, a bearish trigger point. So our 38K level is now a support slash bearish trigger. And of course, this level is going to be now our bullish breakout target slash bullish trigger point. Okay, so we've gone ahead and made our adjustments. What does this mean? When we break above resistance, resistance becomes support. So 38,000, this range over here, has now turned into a short-term or high time frame level of support. On the contrary, our bullish breakout target, because this level has now turned into support, is also going to be a bullish trigger for a continuation upwards, meaning if we are able to break above 40,000, we are likely going to see a directional continuation higher. Our target is going to be $42,000. If we take a look at the current price action, we are pushing up to this 40K level, and as we do know, $40,000 is going to be a level of resistance, and therefore you should not be shocked if you see a rejection from this level. What does this mean in terms of your trading? It means you should not aggressively be stacking longs at this level of resistance. Your entry should have occurred within this huge accumulation phase before a continuation upwards, according to all of the data and all of the analysis we have done in the past. If you're taking longs at resistance, you're going to get wrecked. But that doesn't necessarily mean you have to take shorts. So remember, the trend is technically still up. Everything is still looking bullish. We're just coming into a level of resistance. Only when this resistance actually deems itself as a level of which a reversal will play out from, will you then look for corrections and shorts. Meaning, if you were to short this level right now, you were shorting on the future assumption that this level will result in a correction. This decision we based centered more around speculation and will be a little bit more risky than if you're waiting for confirmation. So personally, I am sitting out. I'm not saying don't short it. I'm not saying short it. I'm saying if you are going to short this level, just be aware that you are front running a potential correction that may or may not happen until we have more confirmation, or at least a retest of 40,000. The reason I say that is, again, we have not quite reached that level, at target level yet from the breakout. The breakout is still telling us we are looking for $40,000. We could see a short-term pullback before a continuation. We could just see a straight up continuation. Provided $38,000 holds as support, the $40,000 target is still in play. So the $40,000 target only gets eliminated from expectation if the price action loses that 38K level once again. If we take a look at the short-term price action and potential corrections, the trend is still up. So provided we remain above this uptrending support level, we do expect the price action to continue upwards. If we fail to hold the 38K level and we do not hold above the major uptrending support line, that is when the bearish scenario on the short term comes back into play. Remember what the bearish scenario is, guys. Okay, we'll go over it again. If we have a breakdown of the uptrending support, we can expect a correction of the short term to retest our wick low over here, this area of liquidity at this fake up point, and fill that VRPV gap. At this point, we will have established a short-term downtrend as we've lost this major uptrending support level. So therefore, at this point, we would have some directional downtrending resistance in which if we broke above again, we'd be continuing upwards. However, we'd be in a downtrend until we break above that level. Provided this level does not hold as support, we would then expect a continuation downwards to retest the local low at 33,350, which is going to be our bearish trigger. If we lose the bearish trigger, we would then expect the VRPV gap to fill and a full-blown correction occurring to 30,600. The probability of each of these scenarios, so scenario number 1 is a retest of 38, scenario number 2 is a retest of the fake out, scenario number 3 is a retest of the 33.350, and scenario number 4 is a retest of 30,000. Each of these scenarios have a smaller and smaller probability of playing out as we have significantly more support that we need to break through to actually facilitate that correction. So, play it level by level. If we short-term correct, we retest the uptrend, look for longs. If we break the uptrend, look for shorts to a fake out. If we retest the level at this fake out level and we see signs of reversal, look for longs. If we break down, we look for shorts. We play it level by level, guys. Thank you for watching. I hope you have a fantastic day. I'll catch you guys in the next one. Cheers.